Hey folks, haven't done a public market update for a while. I've been posting a lot in the community, the realistic trader community, but I thought I'd make a general one because I see a lot of the questions. Also, a lot of comments are, oh, how does it feel to have egg on your face that you're still in cash and the market's moved up, yada yada yada. And yeah, so first of all, there's no need to be a dick. We are all in this boat together. We're all, playing with crypto. There's no need for bitterness, even when I'm right or when I'm wrong. And I'll also admit when I am wrong. But it's too early to tell for the moment. And the first point I want to make a point on is points of data. So we're all investors, right? And we work to certain points of data. So if we take the average retail muppet, someone that doesn't know what they're doing, they've done zero research, they don't even know what crypto is. That their mate Dave down the pub has just told them, oh, buy ETH, and they've just stumbled onto Coinbase or even worse, something like eToro or whatever, and they're just buying that. Their point of data is like this, right? It's their mate at the pub. So they're making a financial move based on, that point of data, whatever that may be. They may have done 10 minutes worth of Googling. And then obviously you have the different scales. So if over here we had, someone like, Ray Dalio, right? Or some big, Gordon Gekko, hedge fund manager, blah blah blah, that's in tune with Wall Street, in tune with the banking system, etc. So this is like as far as you can get, and then obviously it's a sliding scale down. Now where do you sit? Where do I sit? It's actually hard. It's hard to actually put yourself on this scale. Most people suffer from Dunning-Kruger, where the Dunning-Kruger effect, where a little bit of knowledge, their confidence goes sky high, when in fact it's the other way around. So a lot of people would like to think, oh yeah, they're doing all of their crypto trades and investments based on this much data. They think they're nestled up close to Ray Dalio and any big dog in this space, when in fact the reality is that if you're a retail trader, you're basically just above, Dave's mate from the pub or whatever. And I also consider myself around here. I just don't think we have enough data, and we just don't. Like, have a quick think of how many WhatsApp groups you're in where everyone in there is worth at least £100 million. Yeah, it's probably zero. How many WhatsApp groups? In fact, how many billionaires do you know? Probably zero. Like how many billionaires do you genuinely know, not know of or an acquaintance, just know? And the answer to all of these things are like zero. Now let's say you're Chamath Palihapitiya or Buffett or Gates or any of the big names you can think of. All of their WhatsApp groups or Telegram, whatever they're using, all of the people around them, they're all going to be in the same space. So imagine all of the data, the information, the inside bits and bobs that they are seeing behind the scenes that us retail mob we're not privy to. So if you're going to be honest with yourself, the data you're playing with and you're taking financial actions from is very limited, myself included. Even though this is my full-time job, I'm a trader. This is all I do, and I consider myself down here. And I've been trading since I was 18. So I think you're going to be very foolish to think that you have data, anywhere close to this. And by the way, just listening to YouTube channels like this or Coin Bureau or whatever, it doesn't mean that you're at the cutting edge of your data points. So that's one point I need to make you aware of. Now, just some little bits and bobs. The reason why I'm still in cash, and I have been for basically well over a year now, is because I personally believe that I am acting on certain data points. Again, I'm still nowhere near this lot, but I am still acting on data points which I believe the market doesn't, or the average retail Joe is completely blissfully unaware of. So for instance, if you go to this video on my YouTube channel, it has a picture of a bull on it, I think. If I just do this, yeah, it's that one there. So it's from a month ago. It's a recording from a presentation, 3 crazy charts, blah blah blah. So if you go into this video, and then I'd watch all of it, to be honest, but the things, the big macro plays, big things are from about 17 minutes onwards, and how basically I'm going to really cut this short here. Every single time you see a big hike in interest rates, with a whole bunch of other bits which the video explains, you see a big recession. Not just that, if you also were to look at, come on, where's the next one? Because these grey areas are recessions. Now the recession actually kicks off, and the stock market crashes actually after the Fed pivot. So when the Fed stops raising rates and they start reducing them, after that happens, and by the way, they start printing money, QE of some sort, that's when the crash happens, not when they pivot. People think, you know, when they pivot and they start printing, blah blah blah, it's markets go to moon. It's not the case. It literally has never been the case. And you go back all the way through to, you know, 50s, 60s, etc. So, however, if they pause rates, then the market goes up. So it's when they properly pivot. Now, the other thing, when you tally that in with unemployment rates, so everyone's saying, oh, unemployment's great. Well, there's real unemployment and unemployment that you're not aware of. So for a start, unemployment data which the government talk about is completely hodgepodged. Now, I'm a bit out of date with this. The last time I checked was about 2 or 3 years ago. But basically, if you lose your job and you're still looking for a job, you're not classed as unemployed. You're classed as I think part-time or looking for employment or something, but you're literally not classed as unemployed, and you have to be unemployed and sort of given up of looking for a job for a certain period of time, like 6 months or more, to then be classed as unemployed. So all the, you know, the U6 data is all bollocks. It really is. So but however, when you look at this chart, this is unemployment data. If I can see here. Every single time you have a rock bottom or a relative rock bottom in unemployment, you then have the recession. These grey areas are recession areas. So we are literally at the lowest point of unemployment that we've seen since, really, what is that, the 1970s? And so guess what's coming next, folks? Yeah, hopefully a big grey recession. It's the other way around. And don't forget, if you look at just the FANG TM companies, so Facebook, Amazon, Apple, Netflix, Tesla, Microsoft, right? Those 6 companies, just those 6 companies alone, have fired more than 200,000 people in the last 6 months. Sorry, 6 or 9 months. Someone fact check that. But yeah, just those 6 companies have fired or made redundant more than 200,000 people relatively recently. That data is not in these U6 charts. I mean, that's 200,000 people that are now struggling to pay their mortgage or whatever. Now, these are all from tech companies, actually, so they probably had big paydays. So, but, you know, it's not just that. If you look at every publicly listed company, you're going to see a ridiculous amount of unemployed people. So unemployment rates, yeah, is a misleading thing there. And then when you sort of tally all of that in with interest rates, unemployment, all that sort of stuff, and also inflation. When inflation rockets up, yeah, they all tally in. So basically every data point I'm looking at from a bigger perspective shows that we are in for one rocky storm. Now, if we are in for one rocky storm, what do you think will happen to the main markets, as in the S&P 500, the Dow Jones, all that sort of stuff? Well, we're a long way from all-time highs. You know, the market has already done a pretty big crash from top of drop to where we are now is already an 18% decline over a year. Now, not just that, it's like a silent crash as well, because the market has basically been, not only has it gone down for a year, it's gone sideways as well for a fair bit of time, for the best part of a year. So that's, you know, it's like a doubly compounded loss. Really bad English there, but you get my point. Now, if I'm correct, and we are about to have some sort of recession, or, you know, I mean, just look at the Nasdaq; it's just ridiculous. Again, the FTSE is starting to falter. But if we have some sort of banking crisis, yada yada yada, and if, let's just get to a weekly chart. If, let's say, the S&P 500 drops all the way down to these sort of levels here. You know, let's take the top of the pre-COVID drop, okay? So if the S&P does a big dump down here, what do you think crypto is going to do? What do you think everything, you know, crypto is still a risk-on, risk-off asset. So if stocks start dumping, it drags it down. There's still an 80 to 90% correlation between stocks and crypto. In fact, it could be exacerbated the other way around, because if there is a big fat investor that's, you know, got crypto and stocks, and stuff starts falling, they would most of the time people would start selling their crypto first before they sold their Vodafone or Tesla stock or whatever. So all I'm saying is that I personally think it's likely we're going to see a drop down. Again, I'm not telling you to short stuff or sell things or anything. I'm just telling you my two bits and bobs here. But yeah, if markets move down, Bitcoin, crypto will be dragged down the gutter with it. And again, like, just now, let's have a look at Bitcoin. It is like it's a case of stairs to the top, elevator down. Like we saw this. If I just get rid of some of these lines here. So here's Bitcoin, right? If I get rid of some of these indicators as well, there we go. So we had this big old march up, right, from, I don't know, 16k up to sort of 25, and everyone was like high as a kite, going, oh, all-time highs. But just cast your memory back to a couple of weeks ago, where we went from 25k down to 20 very fast, right? In literally a matter of days, we basically eroded half of the gains that it took 3 months. So 3 months worth of gains, 50% of that was eroded in, like, I don't know, a week or two. And sentiment can shift very quickly. And a lot of people completely forget about Operation Choke Point 2.0. Don't forget the banks, or, you know, the higher powers that be, whether it's the SEC, the IMF, the World Economic Forum, or whatever you want to pin the tail on the donkey. They are cracking down on crypto, and Operation Choke Point 2.0 has only just started. And what they're doing is they're trying to restrict inflows and outflows of crypto. If you nail the on and off ramps of crypto, then guess what? You starve it of oxygen. And we're seeing this with the banking crisis right now. Credit Suisse has just been bought out for about $2 billion. I mean, that is just ridiculous. One of the oldest banks and the biggest banks in the world has basically gone bust and been bailed out to the tune of, well, been bought out by UBS for about $2 billion, thereabouts, plus or minus a billion. I mean, that is ridiculous for a major bank to go bust and to be bought for that cheap. I mean, what does that tell you? That tells you that there was a lot of crap on the balance sheet of that bank. And so UBS is now going to have a bit of a feast. It's going to be like, right, I'm going to dump that, keep that. They're literally just going to pick and choose what they want and don't want. And so guess what happens? We're now having a bit of a contraction in the amount of banks out there, because a bigger bank is going to start gobbling up and effectively bailing out, you know, the weaker banks. So then the banks are already too big to fail. Well, it's just going to get worse. So, and what happens is when, you know, if you have all of these smaller banks being gobbled up by bigger banks, well, guess what? It's a lot easier to control the on-ramps and off-ramps. So yeah, Choke Point 2.0 has only just begun. If you think that the crypto regulatory anvil or storm has already passed, you're an idiot, in my opinion. Like, it hasn't even begun. So yes, Bitcoin has now rallied, you know, up to 28 odd grand. But I've said for a long time, this move is completely, so my stance that we're, you know, not out of a bear market yet is invalidated once we get above So you have to understand that support and resistance is not a set line. A lot of people love to draw like, clean, crisp lines, but it's not like that. It's areas of resistance and stuff like that. So if we so it's actually invalidated once we can. Here we go. So that is the sort of the danger area. Now, the only time I will admit I am wrong and that my stance or my bear market positioning is invalidated is if markets can get above, well, actually, first of all, get above sort of 30k, stay here for a few weeks. And that's the key thing. It needs to stick the landing and stay on top of, let's say, about 30k for more than for let's say 2 to 3 weeks. And then the moment we break out of this 32,500 level, that is when I'll go, right, we now have a proper structural change in terms of price action and technical analysis, and it's breaking up above 32,500, where really this is the top of that noise. Now, yeah, then there'll probably be a Kobo, a kiss off, bugger off type thing, but it's only at this point here where my thesis, my position is invalidated, and I'll go, yeah, I was freaking wrong. So if that happens over the next month or so, then yeah, I will have to pivot my position. But until then, what I personally believe, and what I'm still actioning upon, is more moves down. So yeah, I think anything less than 20k I would say is a nice buy. But I still think we're going to take out this low. That low around just above 15k, I think that will be pipped. I think they're going to wick that down and create max pain. What else is there? So yeah, again, some people probably say, oh look, inverted head and shoulders here, neckline. Well, even if that is the case, we're going to see a pullback to at least 25k. I'm skeptical of that for the moment. Just with the amount of, with the big storm cloud approaching, basically most crypto fail the Howey test, and even Ethereum I think is gonna get in trouble. I think a good rule of thumb is that if a crypto has raised money in the past with an ICO, IDO, whatever sort of fundraising they've done, they're going to be treated as a security, and therefore they're going to get slapped. So just, yeah, the SEC has not stopped coming after crypto. It's only just rolling up its sleeves. And again, just looking at this from a technical analysis, look at this on the weekly chart here. This is a massively overextended weekly candle. What do you think happens to overextended candles? They always pull back at least 50%. So yeah, there is a little level of sort of resistance, support here now at that 25k level. So I think even a pullback to 25k is to be expected. Even if we do have more movement up to the upside and we start doing something like this, I think there are a ton of white swans out there, a whole bunch of crap which everyone already knows about, but I think it's just forgotten. And I think another white swan's going to, pop its head above the parapet and get chopped off. And then we could see very fast movements to the downside over here. Now, if we look at the Bitcoin Bitstamp one, this is what I've been sort of doodling on for a long time now. Get to the log chart. So what I've said for in December, January, one of the plays that I was looking for is that I'd like to get in around 12 to 14k, and that there was a doubling opportunity where the market would quickly rebound to around sort of 25, 30k, and you'd have a chance to basically double your money very quickly. Now, before coming back down a bit. Now, this is where I think I may have mistimed it, where I've sort of partially right and partially wrong here, because that move, that sort of bounce move up to sort of 25k ish has happened. So that move down from 15 to sort of 25k has actually happened, and I think I may, in hindsight, held out a bit too long, and really may have accumulated a little bit, not the full pot, around sort of 15 to 17k, because yeah, that move there I thought would happen a little bit later, but yeah, so that I do admit I was wrong there. So that move has now happened. So as I did say, we should let's say that move is what I was expecting here. Well, we should see a move back down to the noise area. Now that noise area is where, where I've drawn this line here. That noise is basically 18 to 22k. So we should at least have a move down here. So yeah, maybe we should. I'll start applying or adding positions in around here. But please remember, I know technically the way you approach the market shouldn't really change depending on how much money you have to play with, but it does. It really does. Like if I was playing around with 5 or 10 grand, then yeah, I would have just bought Bitcoin by now and just sat on it and But I've got lots of different pots and I've got millions of dollars to deploy. So like I don't want to just run into FOMO, if that makes sense. I'm not just gonna just YOLO in at the top of this green candle here. When I see this massive storm cloud. So from the pure investor part of me, not the trader. I'm still trading, by the way. I still trade. In fact, I'm deploying a whole bunch of different strategies. Some of the strategies aren't doing too well at the moment, like the 8 EMA bounce and trail, but my halos are doing really well. But what was I going to say? Oh yeah, from the pure investor point of view, I'm just not going to deploy, a couple of $1 million or whatever into crypto just yet when there's so many bad things just looming in the background. So I'm just going to sit tight. And I think this exiting of the bear market, if we have exited, I've left a gap here because we could already be in this accumulation zone. I mean, this bear market could have actually ended here. We don't know just yet. But look, like every accumulation zone always does the same things. Like even here in 2019, we had a big, very sharp move up from, what is that, 3.5k roughly up to 12, right? Crazy movements. But all of that was just basically wiped off very, very quickly. It started coming back down. Again, I remember this very clearly. Everyone thought you're an idiot if you weren't in crypto, and that is, going to breach all-time highs. Well, no. These gains that we're slowly getting will be vaporized very quickly. And it's the same here with the other exiting of the bear market in 2015, where yeah, you had some pretty big rallies, like from here, this $153 to $290, and then you had basically chop and churn during that range. So, and I think this yellow zone that we're entering is going to be probably a mix of the both. So yeah, so main pot not deployed. I've got 100% in cash, but I'm still trading. I've got various bits and bobs on Bybit, which I trade. So hopefully that makes sense. Also, for those of you who don't trade, what I've done, what we of the team have done, is basically put together, I think it's about 9 hours worth of videos. And if you know nothing, like you don't know what a chart is, we just created this free playlist. So it will teach you the halo, which I use most of the time for when I trade. It will literally teach you how to place trades on Bybit properly. And everything. So yeah, start from the top, work your way down, and yeah, you'll be surprised. I read all comments, so yeah, put any questions, like if you're looking at the security video, etc., and have questions, just pop your question on there, and look forward to seeing how it goes. Again, I read all comments. I don't necessarily have the time to reply to all comments, but every day I check the comments, and I have to hold things for review because we have so much bots. Like look at this, Sam, Bratney, Colin. Look, all of these are these are bot accounts. So so I have to basically report spam, etc. But everything else, I will approve. So. Yeah, see you soon. Toodles, bye.